Welcome to HSBC Build and Grow, a series that focuses on managing finance for business continuity. As financials takes center stage in business continuity conversations, your story together with HSBC is proud to present this series, featuring some of the finest minds in the ecosystem to help businesses leverage the financial ingenuity, perspective, and insights from these experts to power their own journey, their own continuity. Rajat, thank you for joining us today. We're talking in a very unprecedented world, unprecedented time. I just want to understand from you, you're heading the commercial banking at HSBC. Tell us, to all the viewers also, what are you seeing in the commercial banking space? What do you see as the scope, the value, and the new emerging trends in the commercial banking space?
It's really a growth segment for us in India. And so the key thing to take away for the Indian commercial bank is that it's a growth vehicle for the bank in India and for the bank globally. And it's been a growth vehicle now for a decade or more. And that's how I see the Indian market as well. That is what excites us about this market, which is that, we get to meet a wide set of companies whose agenda is to grow. They're optimistic. They want to invest and they want to learn. So really, it is an exciting space. It's a space that makes you feel that you're doing something productive as a banker. You're not just another. You have some more purpose than meets the eye. I see the role that a banker has to play in several ways. Obviously, the first is the most obvious one for HSBC is when a client wants to go international, because that you need somebody to hold your hand and take you through the regulations. I mean, just imagine somebody coming to India; they need to know what regulations are required to open, what approvals are required, and banks can help. I see us and other commercial banks being very important in liquidity and credit support, of course. That goes without saying. The core banks are lenders, and it's the most unfashionable part of banking, but it's the most important function of a bank. And of course, the third function is really to oil the wheels of transaction banking. So trade finance, cash management, both of these sit at the heart of HSBC. So we are the largest trade financing bank in the world. And we move a very significant percentage of global trade, and in India as well. That's our focus. So really helping clients, be more efficient with their working capital cycle, to be able to move their money, cite their money, etc. It sounds again a little boring, but it's quite important for treasury teams and CFOs across. So yeah, so I see as India grows and as Indian companies grow. I see the scope for commercial banking as a growth and as an important support vehicle for them.
Yeah. Rajat, what do you have to say about the recovery right now? Because, there's so many discussions happening, and there is this whole emphasis by the Prime Minister on, the economic revival. We are talking about Atmanirbhar. There's so many things happening, and there's so many conversations on how the economy will recover post the lockdown. Just want to get an understanding from you. What is your perspective? What are some of the things that you are seeing? Are you seeing early signs of recovery? Or it's too early to say?
No, I'll give you my view. So I won't give you the economist view. There's enough of that available. And, by and large, the economist view that maybe I'll spend 60 seconds on it is that you'll have the next 6 or 9 months of a dip, some between 7 to 10%, depending on what your view is on many sectors. And then you will see a recovery into the next fiscal year. So that's the broad view that we hold on, at a macro level. But I'll tell you a little more about what I've been experiencing over the last several months. We've made an extra effort actually to go and reach out to customers during this period of time. What I found is that it's actually easier to meet more customers now than it ever was. And I don't know whether this will change things permanently, but at least for now it's working. So it seems to me that firstly, the recovery is very sectoral. You can almost very simply take a pen and paper and say these guys, without even looking at the companies, saying these are the sectors who are doing well and these are the sectors who are unlikely to have done well. And then if you go and dig down in the companies in those sectors, you'd find that you were pretty much right. So there is recovery. In fact, some sectors never really had a problem. Anything to do with, I'm stating the obvious, but anything to do with non-discretionary consumption did well through COVID, perhaps did even better because people wanted to make sure stock up, etc., etc.
Yeah.
That's obvious. But what's not obvious is that people have resilience and they've tried to get back. And let me give you some examples or anecdotes of what I've seen. Let's go rural first. So if you look at microfinance companies, they went down to, well, almost zero collections or very low collections in the month of April and May. And May started looking better, and June is much better, and July is, gets back to about 75 to 80% of collections. Okay, what that means is, translated, that 7 or 8 out of 10 people who had borrowed, and this is the bottom of the pyramid, right? Really, people who, rural women, are confident enough. They may have always had the resources to repay, but they're confident enough to start repaying and make sure that their credit history is good, and so on. So it shows two things. The first is that you have 80-85% of people now feeling more confident, having more resources. But it also shows that last 15 or 20% is a problem. And you can't wish it away because there is a real genuine problem in income generation, and that is stickier. So the bounce back that you saw between May and June was, let's say, I'm taking random numbers, but let's say it was 40 to 70. Then the bounce back between June and July was 70 to 75, and maybe now it's going to stay somewhere around this level for a period of time. I think the other thing that we are seeing in very large companies, which have good promoters, good business models, were doing well before the crisis. Some of the larger companies have been able to raise equity, have been able to, preserve capital or find some other means of capital, take more borrowing. So I've talked about two extremes. So the microfinance people, where I see pretty strong recovery, but I see some portion of stickiness there. But at the other end, on the very large, very strong corporates, they've buffered up. They've buffered up through equity, through debt, to take them well past this crisis. And in some ways, they will return some of that debt in the coming months or year. But the greater story is actually in between. So if you see many sectors that I speak with, so let's take chemicals, for instance, right? It's doing really well now because people have started coming back to work, and there's enough demand because chemicals goes into everything we consume, right? From pharmaceuticals to packaging to almost everything. So that's doing well. You look at retail, right, which was very badly hurt. Now that's coming back, and tenants are saying, okay, we won't pay you the full amount during lockdown, but we'll pay you 50%, 60%, etc. So they too are seeing some signs of revival. So the way that I'd like to sum this up for you is that I see that a lot of the recovery has already happened. It's borne out by GST numbers coming back to 90% of normal, etc. So, but I see that the last 10 or 15% is always going to be the most difficult one to budge. And that is a little more challenging. And what that needs is more time and some amount of more broad spread economic recovery.
But this is very heartening. No, what you are saying is very encouraging, because right now, as you say, there's so many economists who are just writing off the growth, the India story, right? Like the numbers and the recovery is going to be very slow. But you're saying that you're seeing recovery, and yes, at least in startup ecosystem, we are seeing investments and investments taking place. So yeah. Rajat, but I can't not ask you about loan moratoriums? Because that's like in all the papers, and people are saying that there's going to be, now the bleeding will begin when people will not be able to pay. How are you looking at it? And do you have any kind of a rejigging for your loyal customers? How are you looking at the whole thing?
The guidelines for loan moratoriums are, to my mind, fairly clear. It's good if it's executed well, right? I mean, the law, the practice is fine. You need banks to come together and make sure that they are aligned for the good of the company and for the good of that asset. So I think it's the step is I actually am happy that it's done. Okay, I feel that there was really no other choice. The choice was really that you extend moratoriums further, or you extend the size of the government guarantee scheme or whatever. Because look, this is not an India problem, this is a global problem. If you look at the kind of support that the US has given or Singapore has given, or there's the pay protection, there's a investment plan in Germany if you want to do CapEx, if you want to recast your loans. I mean, the question is, I'm not even sure that there was any other alternative. I mean, the form of support can vary. Okay, you could do government guarantees, you could do pay protections, whatever. Because we are more or less not a fully organized economy, unlike the West. You can't really do just pay protection, for instance. You have to do broader means, which is what this is. Now, the usage of this has to be done responsibly. But I'm glad that it's giving us breathing time. And I would say to the viewers here is that these times, India is not the problem. It is. There have been cases where, or in the past, we've been a sole country with very high level of bad debt. But this is a case where every country has stepped forth, and so does the Indian government need to do so, or the Indian banking system needs to do so. So you need breathing time during. This is like oxygen. Okay, at this point in time, when the patient needs to survive, you don't start thinking of the ill effects, or you need the medicine which keeps you healthy and ready to fight the next battle. You need to buy time.
Yeah.
And we need to be brave enough to accept that in such a situation, you need to buy time. There is really no other option. So I'm a supporter of the moratorium. I'm also happy that, not of the moratorium is now over by the end of this month, but of the restructuring plan that has come in. I also feel that the government guarantee scheme, which is more targeted at mid-sized or smaller companies, I think about 100,000 crore got drawn down in that by the beginning of August. Now they've changed the definition, included slightly larger companies. So I do think that's also going to get taken up. So I think that too was a necessary scheme. If anything, I would say that the scheme needs to be extended and it needs to be more of. And we get taken in by the few frauds that happen, or by the few promoters who come in the papers as having cheated banks or whatever. But there are hundreds and hundreds of legitimate businesses who are surviving and who are trying to pay their people and who are trying to run their factories. And if at this point you lose the little bit of, you start, I'm not justifying bad behavior, of course not. But to punish the mass for the fault of a few is not fair. You need to be able to support good companies here.
Yeah, this will resonate what you're saying with all the businesses, small, medium, startups, that's so true. Yeah. I hope this gets broadcasted and the decision makers all look at this. You talked about that many should not be judged for the mistakes of few, and that brings me to the question of SMEs, like small and medium businesses and startups, and the whole discussion around MSMEs. We keep on saying that they're backbone of any economy and our economy. What do you have to say about the recovery? What should be done in the MSME space, and more so, how do you look at the lending, because a lot of them will require money, capital?
The first view that I'd have is that to lend to MSMEs, the one sector which needs some sort of help is the NBFC sector. Now, I'm a banker, so I perhaps shouldn't be saying that, but I think despite the problems of the NBFC sector, they serve a purpose. Almost a quarter or a little more than a quarter of all incremental lending in the last few years was done by NBFCs. And that's because they're faster, they're quicker to reach, they're perhaps quicker to take decisions as well than the rest of the banking system on an aggregate basis. It's not a comment on a particular bank. So I think some effort needs to be given to recognize the role that NBFCs, sure, there are some NBFCs, again, coming back to the same point, there's some NBFCs who perhaps haven't lived up to what they should have. But again, that doesn't mean that the others are not, they don't serve a purpose. I think the last mile financing purpose, the small loans, the quickness, the efficiency, the ability to take small loans without the cost of delivering that loan is important. So you need some support for that sector through capital markets, through banks, etc. People need to recognize the role that they've played. So that's the first thing and this problem is pre-COVID, right? The NBFC sector was struggling through, several problems due to 2 or 3 NBFCs over the last 18 months, I would say, not just COVID. So even prior to COVID, I have said that, look, you need to support the sector and the good companies there as banks, and we're doing whatever we could as well. The other thing, of course, is that this is a time where both banks and companies are remembered by their actions, right? So when this is done and dusted, as it will be, let's say, a year from now or 6 months from now, whatever it takes for this to get in control, people will see, okay, which companies ran well, which companies paid their debt, which promoters brought in their own capital, which banks lent, which banks didn't, who reached out to us, who didn't, etc., etc. These memories will stay and will form, the environment and the sentiment for a very long period of time. So my suggestion to companies here would be that put in your best here in all forms, because this is investment for the future. Whatever happens in the next 6 or 9 months may inform how people look at you for maybe the next decade or so. So it's really important that companies think of, first and foremost, they should think of their cash flow, because the cash is the oxygen. It keeps you functioning through the next 6 or 9 months or 12 months or whatever we have. And then they should, do all efforts to try to, keep running and keep investing and be optimistic during this period. So I think for SMEs, the government scheme, definitely I would encourage people to look at that. If they need the capital and they want to raise more money, I think you'd find that there's enough support around available in that, and a lot of people have taken. And I think banks have a responsibility in reaching out and talking and educating their clients as well about this. So overall, I'm reasonably optimistic that people will come out well. And our own SME clients who I speak with, I mean, it's inspirational actually to talk to them, because a few of them I spoke to last week in a group, and they were thinking of one customer was thinking of investing, and they wanted to take a loan for it. Other customers were, they initially struggled with labor, who had gone back and migrated, but now had come back. So their main thing was, okay, how do we make sure that the labor force is taken care of and that they're motivated? So yeah, I mean, quite a lot of good stories, which at least anecdotally, if not by data, gives me a lot of encouragement.
Yeah, and of course, the great Indian resilience should come handy right now. Yeah. Rajat, I want to understand from you on the role your bank, HSBC, is playing when it comes to supporting, working, and enabling startups in India, because as I said, this government is extremely invested, and they believe that the growth engine of tomorrow, of the economy, a pivotal role has to be played by startups. And then today, I don't know if you followed, last week, there was this huge announcement by Ju investing $300 million of cash in White Hat Junior. I just spoke to him today. There is a lot of momentum and there are a lot of things happening, but still I feel startups need a lot of support, a lot of right partners, and just want to get a sense, how are you looking at it, how is your bank looking at it, and what are you doing?
I think our thinking too is developing. If I were to be brutally honest and tell you where we are in that journey, I don't think I could put my hand on heart and say yes, we are there. And but it is a segment that cannot be ignored, right? The reason for that is not just the business potential of that segment, which is a reason, not just the fact that startups which start now could be very big and would need a lot of services. Well, it doesn't take a lifetime. We've been around for 150 years as a bank, but you could have a unicorn in a very short period of time.
Yeah, in 3 years' time.
Yeah, in 3 years' time, exactly. So, so really, the business potential is one of them. But we see a few. We decided first a couple of years back to invest in understanding it, right? Because we don't. We are more broad-based, right? As a bank, your understanding of the sector, we would not have to begin with, right? Because of the fact that we are more generalized as a house, and we're a full service bank looking at about 15 different things or 20 different products. So therefore we thought that specialization would be a good way to start off. So we set up a startup team, which Prakash, I think you, and in our business as SME vertical, we said that, look, why don't you do nothing but startups? Why don't you try to understand the ecosystem and see how we can assist and grow and build our business? So I think that's the first thing we did. The second thing that we did was that we said, okay, we saw a few common themes with some startups. Again, this may not be relevant for a lot of startups, but we found that they were either expanding overseas or they were getting money from overseas or something, So that was a natural kind of partnership for us, because there's no other bank who's full-fledged in nearly 60 countries in the world, right? So our network kind of was an obvious one to help these companies with. So that became a starting, not a starting point, but a conversation with some companies who needed that. Yeah. I think then, of course, the third thing that we made a lot of investment in is, and we are continuing to make that investment, is that to bank startups, you need a different type of approach and platform, right? So some of the banks who've done really well with some of the Indian banks, the local private banks who've done really well with startups, the reason why they've done well is that they've invested in customizing technology. So they see, okay, a startup is on some sort of a SaaS platform A or platform B. How do you integrate with that so that it's easier for them to reconcile their payments? Because if let's say you're an aggregator in the B2C space, you have to make sure that you have automated and digital solutions to manage your cash flow and to manage your reporting and to manage your reconciliation, et cetera, or your sales invoicing, or whatever it is. So we've invested quite a lot in technology and trying to understand, to build bridges with through APIs or through our own proprietary platform or through our own digital banking platform. And that's a big investment, because startups do not want to issue checks. They don't want physical, infrastructure in any case. So we are at a stage where, we think that our investment is now top of the line and is customizable to a really to a decent degree. So I think that's the third thing that we've done for startups. And obviously, the probably another question is really on financing startups. And I think we've made some starts there in a few startups. But yeah, sure, I think we are going to find our feet through a period of time there. Having said that, what we are planning to do is really, because we're not a proprietary equity investor, right? So we did have a proprietary equity piece earlier. So therefore, when we look at it through the debt lens, then my approach and our approach is largely going to be through either vendor cards which allow liquidity, which basically provide liquidity,
Yeah.
or through cash flow financing, where we can get our heads around, okay, this is the cycle. Can we use that cycle? Or the third thing is, if the startups are vendors to larger platforms, then isn't this an obvious way of trying to, it mitigates the risk of repayment from
Yeah.
a company which may not have, which wouldn't fit in the normal credit parameters. Then can we use who they are selling to,
Yeah.
right? Can we use that credit risk? So if they're selling to
Yeah.
a large aggregating platform or multinational aggregating platform, then can we use that to mitigate our risk, and can we finance that? So we call it supply chain financing. And that's a massive initiative. I mean, I'm really bullish on it, because ultimately, there is risk is risk. Yeah? It doesn't matter how you couch it and in what word you build it. But if you can, if the risk is actually mitigated because of the structure, then you have a real scalable way of financing startups, right? Really scalable way, not just bespoke ad hoc decisions. And I think the last thing, of course, which I should mention, is what we call receivables factoring. Again, not trying to get into jargon, but essentially there is a move to try to get insurance-backed financing in receivable financing. That, I think, is a game-changing step. As and when it happens, it's still under discussion. So if you get an insurance-backed kind of financing structure for your receivables or your payables, then scalability comes in. See, the main thing that we're trying to see is, do you have models to make this scalable, as opposed to ad hoc decisions that you do on a judgmental basis? So I think we are kind of, as an industry and as a market, I think we're kind of almost getting there. And we have the benefit of seeing some of the Western economies having done this, like RF, insurance-backed RF financing is quite common in most of the developed world. So I think we're going to get there.
This answer is my story. This is the best answer I've found, because the different two things I'm picking from here, Rajat, what you're saying is that the different ways of financing, not just the standard way, where you leverage the growth and the scale which the startup is, the journey that they're making, and how do you partner in an intrinsic way, and not doing it as one-off, but in a structured manner, so that you can do it for a lot of startups, for a lot of companies.
Exactly. I think exactly that's the objective, and we are getting there, but and you need the infrastructure of the country to support it, the laws, etc., to support it. I think the fact that this is now quite advanced, and it, in some of these initiatives that I've spoken about, for example, TREADS, is started in a relatively small way. Insurance-backed financing or GST invoice financing, etc., etc. You have to make this scalable, because the moment you make this judgmental one-off, it's not going to, it won't necessarily serve the purpose of the many. It may serve the purpose of the few.
Yeah. But this also gets me to ask you this question that, when HSBC, the name HSBC, and I've spoken to some of your colleagues about this also, suddenly, makes one think that बहुत पैसा होना चाहिए तभी HSBC के साथ बैंक कर सकते हैं. Like, because all the big companies would be working with HSBC, or you would need certain amount of capital. Just want you to tell us, and you're heading the commercial banking. So, just from a startup and very, very early stage perspective, do you have any size that ऐसी company होनी चाहिए, or it's like anyone can bank with HSBC?
No. So so the impression is probably well formed, because we're largely a wholesale bank in the country, right? Dealing with large corporates. What I would say is that if you look at our track record in several other countries, which is like the UK, like Hong Kong, like Canada, like even the US, you would see that the dealing with mid-sized and large corporates is important, but dealing with SMEs has been equally fundamental to the success of our business in those markets. when you and this, I think you said that this is a fast-growing sector. There's a lot of, it drives India's growth. It does. I mean, India today has some very large companies who are absolutely world-class and world-sized. And then you have a middle block of companies, mid-market companies, which is actually quite thin relative to, let's say, the Mittelstand in Germany or somewhere else. It's actually quite thin. Then you have this massive base of SMEs or business banking, what we call business banking clients. So ultimately, the goal of the country and of banks has to be to grow with this set of companies who will become, this Mittelstand going forward. I hope I pronounced it correctly. Apologies if I haven't, but you know what I mean. So I think there is a lot of value. So it's not just a philosophical exercise; it's a business exercise with where we believe we have a purpose and where we believe we have a business model to work with. So it's doing very well for us for the last couple of years, and we're actually quite encouraged by the quality of companies and the quality of discussions we have. And it's some phenomenal stories we hear. So it's quite inspirational, I would say.
Yeah. Okay. Good. So all the companies of any size are, so they can bank with HSBC.
Absolutely. 100%.
Okay. So now we are in money matter. So tell me, Rajat, what has money meant to you personally? You've been a banker. You've dealt with money all your life. What does it mean to you personally?
Oh God. I don't know what to say. No, money, I think, so for me, coming from, traditional middle-class background, I think money, the first and foremost thing for me is money means security, safety, providing, the nest concept, right? Providing for the future, etc., etc. I think that's, I would say that's a very large percentage of what money means for me. Beyond the point, it's, you take care of that and then you say, okay, what else does it mean for me? I don't know. I don't know the answer to that, Shraddha. I don't know. I think I'm yet to find out the answer to that, to be honest. But I think what it should mean is that when you're able to, and I'm perhaps grappling with this thought as I speak, is that what it means is, after you feel comfortable with security or that angle or the low rung of Maslow's hierarchy taken care of, what you say is that, what do I do with it? Can I use money to build something more constructive or to use it effectively? I still don't have a ready answer for you, but I think that should be the goal. And what I hear from startups is that that's what they've done. They've taken personal risk. They've put their own money where they needed to. Sometimes not even taking care of their own, money, financial security. So at some level, I think a lot of us on this call feel apprehensive about doing that, and at another level, we feel inspired about doing that as well.
Wow, that's a brilliant answer. Thank you. Yeah. Thank you so much. And that's why you're a banker, right? Because
I don't know.
Otherwise, you will also be doing a startup. And we need bankers where we can trust and, who have to be apprehensive a little bit about the money. Thank you, Rajat. It's wonderful talking to you. Genuinely, very good talking to you. Yeah.
Likewise, Shraddha. I enjoyed the talk.
Thank you.
Very supporting, and thank you so much for sharing the time. It's been a great association, and appreciate everything you and the team have done.
Thank you.